in partnership with CommSec.
Tom Piotrowski time. Good morning, Tom. You good this morning?
Pete, good morning.
Coffeeed up, ready to go?
Slightly under-caffeinated, if I'm being truthful.
Okay, so we'll have to wait for that. How are our markets looking today?
Quite good, Pete. We're anticipating a gain of 0.5% when the market kicks off. So that's an encouraging start to the day, which has been handed to us by developments in the Northern Hemisphere, but in the US in particular, because last night we saw the release of the November consumer inflation report. So these figures passed muster. There was nothing to stand in the way of a potential rate cut next week when the US Fed meets and decides on rates. So that was, that's one of the final hurdles for the US markets as we round out the year. So that has been reflected in technology stocks in particular last night. So the Nasdaq has surmounted the 20,000 mark for the first time ever. The index is up by 1.8%. The broader market up by about 1% as far as the S&P 500 is concerned. The Dow is positive. So this runway for lower rates, Pete, has seen technology stocks, as I said, do quite well. A company called Broadcom is up by around 7%. They've announced that they'll be collaborating with Apple on a new server chip, and that has seen the fortunes of that organisation rise. Tesla shares are up by around 4%. That's noteworthy for the fact that Tesla shares are up by about 70% since the US election. They've been on a tear, to say the least. Elsewhere, there was a rate cut from the Bank of Canada last night, an aggressive one of 0.5%. They've now cut rates by 1.75% from their recent peak. They said that they expect their inflation rate to remain subdued in the medium term, so that was good news. So today is an important day. We've got the November unemployment report to be released as far as the local picture is concerned, Pete. We're expecting 25,000 jobs to have been added to the economy, the unemployment rate to be at 4.2%. So a softer number where jobs growth is concerned will just consolidate the market's view at this stage that we'll see a rate cut in February. The pricing for that is turning around 60%. That's the market's pricing. So a softer employment figure will contribute to that validation, I suppose. But there's still a lot of fluidity around what needs to happen around inflation, employment and growth in particular.
All right, 4.2, the magic number there to watch. Tom, thank you.